Welcome back YouTube. Today's NFP day, which is one of the most important data in the whole month. I received so many questions and messages from you guys asking about my opinion about gold, how to trade around NFP, and what is my general expectations about the gold market. So if you want to find out the answers to these questions, stay tuned and watch this video. NFP, which is one of the most important data of the month. Not surprising, because the health of the US is going to affect the global economy as a whole. The US government runs a massive trade deficit, meaning that America is importing more stuff than exporting, and the US consumers have one of the highest disposable income in the whole world. Therefore, if the economy is in a good shape, jobs are created and salaries are paid, then the American people are going to spend their hard-earned dollars on consumer goods which are produced outside the US. The number one trade partner of the US is obviously China, which is in fact the biggest producer of goods in the whole world. This leads to the assumption that China is the biggest buyer of raw materials in the whole world. And by now you should be able to connect the dots and see how this is all correlated. If there is a worse than expected jobs in the United States of America, China is going to order less, which will lead into a global slowdown of trade. And also the Fed is closely watching the NFP numbers because they plan their monetary policy around employment statistics in order to avoid overheating of the economy. They're doing this by increasing or decreasing the money supply in the economy, adjusting the monetary policy, quantitative easing, and other tools at their disposal. And you can see that interest rate is highly correlated with gold because it's going to affect the money supply in the world and also the inflation expectation of investors, which then going to affect the price and demand for gold. Last month, the employment numbers were really disappointing in the United States, which led to a 3% increase or a sharp jump on the gold USD spot market. So now that we discussed the economics behind the fundamentals and how does the US job market affecting the interest rate, the employment, and in fact the gold prices, it's important that we look at the technical analysis of the gold market. On the chart in this rectangle, I marked the last month's non-farm payroll, and you can see that the job data was worse than expected, which led into a $50 increase of the USD gold spot market. And also after this sharp or impulse move to the upside, there was a retracement or pullback to the downside before it continued its way to the upside. And today's situation is fairly similar like in last month, because we are close to the weekly trend line, which if I just go to the daily chart, which it's easier to see, you can see that we have a nice bullish trend line which the price is respecting because it's creating higher highs and higher lows. So we have the most beautiful market structure of this year, because the price is really bullish. And you can see that the price retraced back to the trend line, respecting the trend line, the support and resistance if you look left on the chart, and also the Fibonacci 50% level. So you can see that there is a massive wick of this daily candle which signals a rejection of the trend line, or respecting the trend line. So if you go back to the 4-hour chart, let's look at what could happen with the USD gold spot market if the US job data is bad. So if we have a worse than expected job data, I would expect the price to have the same kind of effect like last month, so that we're going to have a nice big push to the upside. Now, if we have this and if you trade this, make sure you use enough stop loss, because the price could be really volatile trading around any high impact news. So in this scenario, if the price respecting the support and resistance, the Fibonacci 50% and the trend line, I would say the first take profit level is obviously take the money as soon as you're happy with the profit. But if you're longer term trader, I would maybe target the previous highs if you're a swing trader. So in this case, it would be around 1908, 1910, but obviously you can take as many take profits as possible if you're happy with the reached target. Now in the longer term, if there is a sharper increase to the upside, I would expect the same kind of reaction, a retracement back to the trend line. Why do I say this? It's because I think there's already priced into the market. So if you know the Dow theory and if you know some economics, you know that there is the markets are efficient. There is an efficient market hypothesis saying that everything is priced into the market. Now there could be some minor impulse move to the upside, but if you look at the bigger picture, you can see that nothing has changed really, because gold price is going up and up and up. So I would expect pretty much the same, to have some kind of impulse move in the short term, but in the longer term we would continue our way to the upside. Now this was the bullish scenario, and see what happens if the job data is better than expected. Now if the job data is better than expected, you know what's going to happen with the interest rate and the economy. The Fed is watching the interest rate or the employment statistics, because if the economy is overheating, they need to step in and they need to put under brake in the economy to avoid overheating. So in this scenario, if I just go back to the daily time frame, you can see that we have a massive bearish candle. So after weeks of bullish momentum, this is one of the biggest bearish candle we've seen, well, pretty much since February. So there is a high possibility, if we have a better than expected jobs data, that could spook investors, because what they're afraid of is inflation. Yes, inflation is going to be the boogeyman of 2021, because if inflation is going up, then the money supply will be decreased, and it's going to affect the company's ability to borrow money, and also they have to pay higher interest rate on the existing loans. So this is why investors are afraid of the inflation and interest rate. So in case if we have a better than expected job data, that would signal to investors that the inflation is gonna go down in the longer term. It's gonna go up in the longer term, sorry. So in that scenario, I would expect the price to break this bullish trend line. And obviously we have a support and resistance level right here. So maybe price would come down first to 1840. And then I would expect a bounce back to the trend line, retesting it, and then it continue its way to the downside. Now how low it's going to go, I don't know, but if you look left on the chart, you can see that we have obvious support and resistance levels. So the first one is 1815 or 1813. Now I do more detailed analysis into the members group of the AlphaFX Academy, but for you guys this would be more sufficient, because you can just eyeball the chart and see the obvious support and resistance levels, and this would be sufficient for you to trade. Now if you want to get more accurate analysis, you can join into the AlphaFX Academy, link in the description below. But let's go back to the chart now. So in case there is a better than expected jobs data, inflation is likely to continue to the upside, price would break this bearish trend line, this bullish trend line, and then we would expect a retest of the support and resistance at 1860, 1870, as well as the trend line, and then the price would just simply melt down all the way to 1815 and even the 1800s, which is, you know, it is a high possibility that the price is going to retest 1800s. Whatever you trade, whatever you do, it's important that you digest as much information as possible from the internet. So don't just listen to me, listen to other traders. What do they have to say about the economics, about inflation, monetary policy, you know, the gold demand, gold supply, and you have to come to the conclusion by yourself. There is no holy grail. There is no secret signal that's gonna work every single time. You have to make an educated guess about which direction is the gold market gonna go. So I hope you enjoyed the video, guys. If you get any value out of the weekly videos, remember to hit the subscribe button, hit the like button, and you know, just be careful. This is the AlphaFX.